Managing risk is a crucial aspect of successful investing, especially in the unpredictable world of the stock market. While it's impossible to eliminate all investment risk, investors can employ various risk management techniques to protect their capital and minimize potential losses. Setting stop loss orders can help investors limit losses by automatically selling a stock when it reaches a predetermined price level. Position sizing, another risk management strategy, involves allocating a portion of your portfolio to each investment based on its risk and potential reward. By implementing these risk management techniques and staying disciplined, investors can navigate market volatility with confidence and achieve their long term financial goals. Like, subscribe, and follow the Wealth Pioneer for more.